I think people historically are like that. They'll sit on the sidelines, not just about real estate, about any kind of investment if there's something they're unsure about with good reason. Again, risk comes back to just not understanding. It's really our job to help our investor base, our partners understand what's going on in our opinion and in our professional opinion, and help them feel comfortable with the decisions that we make. And again, I don't have to preach it to you, but a track record of success certainly helps to solidify your point, right?
Today on the show, I have the pleasure of speaking with our Director of Equity here at RSN Property Group, Willy Morales. Now, Willy manages our institutional investor relations and oversees all our equity on our platform. And he has a very, very strong background in private banking and wealth management, with extensive experience with working with high net worth families and institutions executing on equity strategies such as investing in commercial real estate. Really pumped and excited to have him on the show today to share his incredible insight and knowledge with us. But enough out of me. Let's get him out here. G'day, Willy. Welcome to the show. How you doing today, mate?
I'm doing awesome, Reed. Appreciate you having me on here. How you doing today?
Good, mate. Good. And for all those people out there, just a bit of an, besides what I just said in the introduction there, Willy has recently joined RSN about a year ago to really supercharge our equity raising abilities. And, but he comes with a wealth of background in wealth management. And I'm going to let you, Willy, talk to that and where you've come from, and give us a little bit of a story of how you've come through the wealth management space and found yourself now here at RSN working with us crazy lunatics.
No, appreciate that, and I like that. I like supercharge. It's certainly a nice way to put it. No, absolutely. Essentially, my entire career has been in finance. You consider even some of the earlier jobs that people have. They're like, hey, I used to work at a restaurant waiting tables, and my first role was very much as one of the customer service guys at a bank. I started very much at the entry level, and went to college out of Miami, and essentially worked my way up in that, going from role to role in banking until ultimately I figured out this is something that I want to stay in, and I want to be able to help people understand what to do with their money, whether they don't have much of it or they have too much of it. And, that's another problem apparently. But went through the traditional banking system, worked as a commercial relationship manager for some time, then moved on to transition into wealth management, where I was essentially helping families understand, what happens when dad passes away or mom passes away. She was making the big bucks. So what do we do with these investments? How do we not have the kids basically blow their inheritance on maybe a car, a fancy car or something like that? And that's where our role came in, and really helping that legacy that people want to leave behind for their family, and turning it into something fruitful, whether they want to go through like philanthropy, something along the lines of philanthropy, or they want to, essentially open a business for the family in another sphere. And that's been incredibly rewarding. And, that transition eventually turned into working with institutions and helping them understand what they want to do at a larger scale, helping communities, right? Particularly in real estate, you consider what are the effects of institutions have, with regards to real estate. And it's really helping communities grow, enhance what they look like, give amenities to families, that they'll actually use and need in their communities. So I figured there was a big gap in traditional advising. There was enough of alternative investments to where, there's like 2 or 3 players in some of the firms I worked for. And it was very restrictive. And that's, when you and I came into conversation, right? And I figured I really enjoyed the thesis of the investments that you did. Like I looked at your track record. I wanted to get or be part of a company that would encapsulate, my general thesis and like ideology of investing, which is really just helping people have that peace of mind with their future, and working with somebody that actually cares about what the result is going to be on their end. So, that's when I hopped over here, and today other people don't know, but today I'm helping some of these higher net worth families that are able to make some of these commercial real estate investments. Of course, working with institutions to help them not just invest in these real estate deals that we present, but also get them something that it fits into their portfolio, right? Something that aligns with their investment strategy, and whether it be, I'm looking long term here, or I'm looking really at a shorter term. I'm looking for specific kind of income for my family or for my firm. It's really just narrowing down on something meaningful to them, and then matching it to our investment strategies, right? It was
Yeah.
long winded, but
No,
appreciate that.
it's good to hear a background. Remind me again, or who did you work for before, coming over here to RSN? Because you work for some pretty big firms.
Yeah, sure. It's if you heard of Vanguard, I'm sure maybe a couple people have. I did work for Vanguard, essentially working with what they consider as ultra high net worth families, like family offices and institutions. That's where a lot of the direct advisory work came in, and a lot of like alternative investments, not just in real estate. That was, like I mentioned, a smaller portion of it. But some people wanted to get into oil and gas, whether it be like venture capital, right? Tech companies, and we help them to get into those kind of investments, and then obviously, the traditional ETFs and whatnot. And prior to that, Truist, I worked there since before that merger at SunTrust. That's where I got started with, I would say, that a whole new world of wealth that I understood. And down in Miami, it's a community, I would call it a very affluent community. And you would just see a lot of celebrities. You would see a lot of business owners from like large conglomerates, and pass by there, and you would just make a ton of interesting relationships. I've got stories to tell for days that you don't have enough to record on here today. But that is where a lot of my connections came from, and really understanding of the broad world of business that many people don't get their hands on or get to hear about, right?
Right. And you are licensed, right?
Yeah, I'm a licensed broker and advisor, and right down to it, we help people with the nittiest and grittiest of financial planning, any kind of investment thesis that would connect to taxes. And we wouldn't give them specific tax advice because bigger corporations want to shy away from that, right? They don't want the liability, but we would work together with accountants, CPAs, and attorneys and whatnot.
Yep. What's been the biggest thing you've learned over the years? Now coming to a smaller shop, going from Vanguard, one of the big 1-2, investment, platforms in the world, coming to a small shop like RSN. Like you mentioned alternative assets. You mentioned not, being restricted to sell certain things because, Vanguard's got a lot of products that the average investor may not necessarily understand. So what have you taken away from coming from some like a big conglomerate like Vanguard, coming over to RSN, and what's been the sort of commonalities in the investor discussions you've had, and what's also been some of the differences?
I'd say the word risk comes to mind, risk and liability, and it all boils down to like what risk really is, right? It's just when you don't understand something, right? You're gonna go into something and you don't know. You could specifically, be an expert in selling ice cream, Reed, right? And if you start a business in selling shoes, you carry a big risk, right? Even though they could be very similar in the way that maybe product is stored or what have you, or maybe very different. It's just a risk because you don't understand it yet. And I think that's where bigger corporations don't want to take that risk. They don't want to have that liability at a very broad level. It just opens them up to potential issues. And while I understand it, I feel like it can also be a little bit of a disservice to individuals, right? And companies, because there is an aspect of, maybe a more sophisticated investment that can be the exact situation that you want to be in, right? For your finances, but to that point, maybe real estate, some people didn't understand it. You give them a little bit of education, and it can be something that they can take on. But I would say what I've learned as at maybe some of the bigger corporations, take it a little slower and choose not to take on certain liabilities and risk. And as part of a big reason why I like the space in in terms of alternative investments, private investments, when you can get into a niche, because you can really help somebody without these chains. And there obviously is a regulatory body that still kind of governs us, right?
Right.
But you can get a lot more personal with people and not feel like you're restricted to a specific ideology of a company. And quite frankly, a lot of these firms get a percentage for them selling you their products. So is there as much incentive for them to pitch you something that isn't under their house? It's again a bit long-winded, but those are my thoughts on it, right?
No, and I think in general, people's approach to direct investing has changed a lot since the Jobs Act of 2012. Historically, investing into commercial real estate has been the country club type of, if you don't rub your shoulders in those type of arenas, you're not getting exposure to it. But over the last decade or so, that's changed dramatically with a lot of crowdfunding websites popping up, direct investments into deals, right? And so there's a little bit of difference there that you're investing directly into a deal, into an operator like with RSN versus, say, Vanguard selling a product. So there's a little bit different regulatory hoops we have to jump through versus, say, someone who's licensed and giving sort of third-party advice on a particular product that they don't necessarily control the outcome of. Like we're on our side of the coin, we are a sponsor. We are out finding those deals and asking people to invest alongside of us with our money. Thus, there's just different rules that apply. But have you seen a little bit of, in the last sort of 12 months being with RSN, have you seen a bit of a shift in the retail investor sentiment, particularly around commercial real estate? Maybe, sort of call it 2023. I know I have, but I wanted to hear from your side of the story.
Sure.
There's been a bit of distress, and how is that playing out? And are you seeing any sort of changes in the first 6 months of 2024?
I would say absolutely. Almost night and day from our experience, and we've done a couple of projects now together, and every time I talk to a group or an individual, it's felt like since I would say last 2 quarters of 2023 to the first 2 quarters of this year, it's a huge shift. And I would have thought that, I don't like to get into politics, but politics might have had something to negatively impact this year, but it almost feels as if this has lit a fire under investors now compared to last year. People were a little bit more reserved. They're a little more cautious of investing in general. They felt like they wanted to maybe have some cash on hand. And this year, I feel like people are more aggressive, and whether it be because of inflation, there's just different opinions coming out. People want to have their cash in something that is growing in value, and also providing some kind of income that's going to be treasuries or like your standard money market, right? It's just not becoming, it's not enough for them to plan out what their future is, right? If their income levels, they're just like, hey, I have to do something. This is the sentiment that I'm getting from investors and from firms. I mean, they know that there's opportunities starting to pop out now. I don't think it's a secret, anymore. There's opportunities popping out now. There's a ton of other operators that maybe were a little hasty in their decisions and ended up maybe not securing the type of debt that they needed to secure, or maybe paying a little more than they should have for a property. And these opportunities are coming out now, and the institutions can clearly see that. I think banks are starting to be a little bit more aggressive and in these types of acquisitions, and institutions that are investing in these kind of projects are very cooperative and willing to speak, to say the least. So on both ends, it's nice to see it converge, where it's both ends. You have these individual investors and families really on the same page as institutions. And to me, that speaks volumes, right, about what is to come right now.
Right. Well, I think it also has a lot to do with the shockwave that you went through the investing landscape, coming out of COVID to fight inflation, right? We went from 0% up to 5% within a 12, 18-month period, right? Very, very quick. And no one, even the experts, expected that to occur, right? And you've got our side of the house, which talks about alternative investing and don't invest in stocks and just invest in real estate. And the stock market's been on a tear. Yet on the other side of the house, commercial real estate, as interest rates rise, asset values decrease, right? So a lot of retail investors who've been investing for the last decade since the Jobs Act have made some good investments, but more recently, some of their investments may be worth less because of where they bought it for and in conjunction with this fight on inflation. And so I think you have seen a lot of investors waiting on the sideline. And we saw that just in like sales data from what we buy in the commercial real estate, 70% transaction volume down in 2023. And, if you take, where we really started in early 2022, or when ramped all the way up, and then 2023, everyone was just like, oh my gosh, what the hell has happened? We're going to sit on the sidelines. And now it's like, hey, I've sat on the sidelines for 12 months. I need to get going again. It's sort of a combination of missing out, having time in the saddle that the higher for longer inflation is taking effect. We're starting to see the end of it potentially. And let's get back in the pool. And there's also then you mentioned some operators with debt problems. Well, if you've got floating rate debt and certain instruments on your properties and your asset value is worth less, then you can't hold on to it any longer. So there's opportunities to be buying, and we're seeing blood in the street, right? We're talking to a lot of investors, right. You are as well, that are maybe their equity positions are completely wiped out on a deal that they bought back in 2021, 2022. Multifamily asset prices have reduced, and we've said this on our State of the Market, which we do twice a year, between 30 and 40, maybe in upwards of 50%, today, where they were the peaks in 2022. So there's some great buying opportunity, but there's also a bit of distress out there, and some retail investors as well as institutional. Don't get me wrong, it's not just one or the other, because you've got institutions that are also taking big licks right now that are saying, had to sit it out, see where the path was going. We couldn't see the forest from the trees, and now we're starting to see a lot more activity here in 2024. So, which is translating to people wanting to invest. On our recent deal on Las Brisas, we filled up very, very quickly on that deal, which was surprising because I had reservations coming to that deal, thinking, based on our last two deals last year in 2023, it was a slog to get equity. It was hard, and now today, it's a lot more enthusiasm. So, any thoughts and comments on that?
It's hard to tell when you have an operator, like RSN, and you have a reputation where it's like we're consistent. And I'm not just saying that to, be nice and kind of float your boat here, but having consistency, you do also see a lot of people who've done 1, 2, 3, 4, 5 deals with us say, well, I mean, these guys are, essentially very, very much following a process, and, it seems to be working out, right? So you consider the peace of mind you start to provide to some of these people as well. Also certainly helps to say, hey, this must be a great time. And I did see it. I'd say, I'm just throwing out a number. I don't know if it means anything to you, but 40% faster than maybe some of the last deals at the end of last year. And I think people historically are like that. They'll sit on the sidelines, not just about real estate, about any kind of investment. If there's something they're unsure about, with good reason, I think, right? If, again, risk comes back to just not understanding. And if it's really our job to help our investor base, our partners, understand what's going on in our opinion, and right, in our professional opinion, and help them, feel comfortable with the decisions that we make. And again, I don't have to preach it to you, but a track record of success certainly helps to solidify your point, right?
Right. Now, as we look forward into sort of the end of 2024 and beyond, what do you think? What's your sort of crystal ball show right now of where investor sentiment's going to come, and how that ties into future investments, not only at RSN, but globally, in terms of people jumping back in the pool, so to speak?
I've seen it in my experience with different kinds of investors. I would have some kind of assumption that US-based investors are still going to tread cautiously towards November, right? I think, again, historically, they'll tread cautiously, but I think there's more confidence now to where, maybe instead of investing 800,000, they might invest 500,000. They still want to be involved, right? They still want to participate in the market. That's how I personally see things. There are definitely some investors that are more aggressive and they wait for moments like this. They wait for turmoil. And I talk to them all the time, and they thrive in this kind of environment. So there's that group of it. And a lot of experiences that I have are with international investors as well. You consider, South America and certain parts of Europe that also like to invest in US real estate. They strongly believe in it, right? Objectively speaking, it's one of the safest markets that you want to be in. So they, quite frankly, don't even care sometimes what kind of returns they get. They just know that the value of, consider multifamily is something that you want to have your assets housed in and grow over the years. It's just a different investor. There's a different mind frame that they have for each investment, and I think there has been a lot more activity in the international markets where they're coming in and they're putting in money. They're still underwriting deals. They're still looking at it as we would, but they're very optimistic about the U.S. markets. It's all relative, right?
Right. Well, I think there's a lot to that to unpack with international investors, but I think in general, the sentiment that I'm hearing from you is that there's been a change, there's been a shift. People are cautiously optimistic, and I think the message that I'm hearing, at least from when I know when you and I talk offline, that you can't really time the bottom, but we feel like we're at the bottom, somewhere around the bottom right now. And you can look at the Blackstones of the world that are making billions of dollars of investments into commercial multifamily. They're bullish on it. You look at the supply issue, and that's really trickling down. The tap, sort of the spigot's turning off, and that's only going to help with rent growth as we come into the future. And then you've got the higher inflation, right? Which is, you see, or have historically, we've had higher inflation. There's always been a flight of capital into physical assets like real estate, right? So they want to protect it's an inflation hedge. So I think with all of that, there's time on the sidelines, time to get back in the pool, approaching the bottom. There's just some sort of distress right now, what we're seeing in commercial real estate. Well, now's the time, let's go buy. So I think with all of that, I completely agree that there's going to be more of a bidding frenzy. And so, if you're out there listening right now, Willy's on our team. He heads up our equity platform, and get on a call with him and have a chat and talk about what you want to do in the commercial real estate space and how we can play a part of it in your diversified portfolio, because that's what we at RSN want to do. We want you guys to be diversified across different asset classes, but in your real estate portion, let us be your go-to provider. And, if for your commercial real estate allocation, come to us and we can have a chat and talk about what we do and our track record. So Willy, to finish that, do you want to finish that thought off and any other last minute thoughts before we get into the lightning round?
The lightning round. No, just to second that point, I do like to be as objective as possible. I think people will agree. You've heard it before, diversity, diversify your portfolio. And you're absolutely correct, right? Like, it's certainly something you want to have spread out, but in the portion of real estate, it doesn't just mean buying a rental property. It doesn't just mean throwing your money at anybody who makes a million promises to you. You certainly still want to do your due diligence as you would with any other company and any other investment. You want to work with somebody that you can trust and is consistent and is working for you, right? Understanding what you need. And I'd like to think that we're the company that does that.
Yeah, no, exactly. We try and pride ourselves in doing that. Well, mate, at the end of every show, we like to dive into the top 5 investing tips. It's a lightning round, 5 questions. I haven't given you those questions, but are you ready to get into it?
No, well, go ahead.
Mate, question number 1 is, what's the daily habit you practice to keep on task towards your goals?
I'd say getting up and doing something that I'm going to hate for that day. It's usually like working out or something to that effect. So, once you do something you don't want to do, it just makes the rest of the day incredibly easy.
Was it eat the green frog or whatever they call it?
Yeah, I mean that I haven't heard that one before, but yeah, sure, any frog.
Question number 2 is, who's been the most influential person in your career to date?
I'd say no, I was gonna say you, but you'd never
No,
believe
kidding.
me. I'm just kidding. No, I did have a mentor who did get me in a transition from traditional markets into real estate, or at least thinking about real estate. And he happened to be one of my clients at the time. And he kind of took me under his wing and taught me quite a bit about commercial real estate, just real estate markets, and I did some debt syndication a while back, and he certainly helped me understand a lot more than I ever thought I was going to understand about the real estate markets.
Yeah. What's his name?
Ash. His name's Ash.
Ash. Well, Ash, if he's listening, g'day, mate. Question number 3 is, what's the most influential tool in your business? And when I say tool, it could be a physical tool like a phone or a journal, or it could be a piece of software that you just can't run your side of the business without. What is it?
I would say there is a tool that I use that's called, should I be saying the name of it for,
Sure.
or do I have to wait for them to pay us for a mark? No, I'm just kidding. I use this tool called Opal, and it's not related to anything real estate or underwriting related or anything like that. It's very much like a personal development tool that essentially schedules things that are going to be blocked off your calendar, and it really just helps you organize your day. You can drift off very easily into a particular task. I think that you can get into it. You're 30 minutes over on a meeting, and then boom, the rest of your day has to be rearranged. So that has been pivotal in keeping on task.
Love Opal. I've never actually heard of Opal after doing this show for nearly 10 years. Opal, I'll have to check it out.
Yeah, it's for your phone, your computer. It blocks off certain applications for certain periods of time, and you could focus on the ones that you need to use.
Love it. Love it. Question number 4 is, in one sentence, what's been the biggest failure in your career? What did you learn from that failure?
Biggest failure in my you fail often. Once when you win a couple of times, right? I think anybody can say that. I would say that working in banking, I unfortunately there was times that you couldn't necessarily capture the client that you wanted. So there was this one client that I did want to help with quite a bit of, I would say, I don't want to say products in the bank, but there was a lot of things that we would be able to help them with planning. Their family had just passed away, mother and father. It's a tragic story, but I won't get into that part. And unfortunately, we couldn't provide, number one, a certain type of credit, it's an alternative credit that they provide in wealth management, and they couldn't access essentially restricted shares to an extent. Are you familiar with restricted shares?
Yep.
So they couldn't access these restricted shares for a certain period of time, unfortunately, and they couldn't access the essential equity or line of credit. In this case, we couldn't extend it to them, which they did need in that particular instance for personal reasons. And unfortunately, that felt like something that I let them down on. I was able to get them guidance, fortunately, but it wasn't access to capital for some time. It took like 2 years for them, her and her remaining family, to get access to that capital. And it's something that I think about often. It could have helped quite a bit, and maybe it's not my failure, but maybe I should have at that time had access to different information. There's things that you often think about, and to that there's a lesson that sometimes there's things that you can't do, and you can only control what you can control, right?
Right.
So, yep.
Awesome, mate. Well, the last question is, where can people reach you to continue the conversation that'll be in your sphere? Where do they go?
I would say you can email me, Willy at rsnpropertygroup.com. My phone number is plastered in a lot of pages on RSN and on our pages in general. But email is best, and of course I'm on LinkedIn. I'm just like most people. Instagram, all of them. Just look me up by my name, and I'll be there. I'm happy to help. Except everywhere except MySpace, because that's not it's not around anymore.
Well, mate, look, thank you so much for jumping on today's show. I just want to reflect some of the things I took away from today's show. I think it's your curiosity about wanting to push yourself a little bit more and understand the alternative asset space and how you can really provide a bridge and education to folks who, they get bombarded with certain things and have certain what's the word, like biases towards where they're investing, and not having a true understanding of the landscape that's out there, that's available to the average investor, right? And, you've come from Vanguard all the way through to now investing in private companies like RSN Property Group in commercial specific multifamily real estate. Like you've had a wide breadth of experience, and I'm super grateful that you're a part of the team, and just really, really enjoy, talking to you every single time what we do, and we get deep on certain stuff because you're a wealth of knowledge. So did I leave anything out in that little summary?
I don't think so. I mean, you're going to make me blush. You're going to.
Awesome, mate. Well, look, thank you so much for jumping on today's show. Enjoy the rest of your week, and we'll catch up very, very soon. We're going to have another cracking episode jam-packed with some incredible advice from Willy. Remember, go check him out if you're interested in learning not just about RSN and what we do, but just more about the philosophy that Willy has around investing and being a real thought leader and educator in and around the space of trying to break it down for investors into consumable bite sizes that they can start to really understand the investing landscape and where they should be placing their money across a diversified portfolio, given Willy's awesome background, all the way come from Vanguard, all the way now into here at RSN Property Group. I want to thank you all for tuning in to continue to grow your financial IQ, because that's what we're all about here on this show. And we're going to do it all again next week. So remember, be bold, be brave, and go give life a crack.